Hey, everybody. Welcome to the Vagabond VC podcast, the show where we talk to venture capitalists, founders, and others involved in the startup and funding ecosystem in global markets. Today, we continue our journey through Mexico's ecosystem with my guest, Luis Barrios, founder of Arkangeles. Luis, welcome to the show.
Thank you, Seb, and all the Vagabond community. Happy to talk to you.
Appreciate it. So let's go ahead and dive in. Tell us what you're working on with Arkangeles.
Arkangeles.com it's a crowdfunding platform that its main mission or purpose is to help people increase their wealth, either as a startup to give you access to a broader community of investors, and if you're an investor, give you access to invest as a millionaire, so you can diversify portfolios in private equities that usually are neglected around the world. So it's a way of giving them an opportunity to invest differently.
You guys are basically an investment platform. And where do you focus your investments? Are you focused only in Mexico, or do you expand beyond that?
I don't see Mexico as a unique country. I see Mexico as part of the whole region of Latin America, because we have a bigger opportunity when we see ourselves as a regional market. In fact, most of the startups in Latin America jump into Mexico, and Mexico down south into different South American countries in order to expand their businesses. Why? Because in the whole region, we have combined the GDP of above $5 trillion. We have a combined population above 650 million. When you sum that with all the expats and the Spanish-speaking countries around the world, we sum up more than 750 million people around the world, becoming the second most spoken language in the world. So you have a very big reach and opportunity when leveraging with the internet and mobile platforms. So we invest around the region. We have access to top deal flow in the Latin American region. On the side, we manage a fund, a small seed, pre-seed and seed stage fund, in order to seed the first check, and then we help them as a complement with the platform to enhance their fundraising efforts, and that's basically what we do at this point in time.
Tell me about your background. Why did you decide to get into investing and working with startups?
I have the privilege to have an entrepreneurial father, a businessman before that, and my mother has been an entrepreneur since the beginning of her productive life. My sister's an entrepreneur. My brother's an entrepreneur. We have this embedded in the family. So when I went to do my MBA to the US at Babson College in a very strong entrepreneurial program, when I came back, I never wanted to stay in the US. Even my father pushed me to, hey, look for a job in the US and stay for a couple of years, learn, train yourself, and then come back. I said, no, I don't want to. I want to spend more time in my country at the big. And then I didn't want to go back. Since then, I've never been back to the corporate world. So in a way, my passion or my vision of myself was being an entrepreneur and helping others fulfill their dreams through entrepreneurship. On what I've learned and the mindset that I built up while at my MBA. My father wasn't that keen about it. He said, "Come back and look for a job." Still, at that point in time, back in 2010. The perspective or the way of seeing entrepreneurship in Mexico, and I can say throughout the whole region, was if you're an entrepreneur, you were a founder of a new company, you were just jobless, you were unemployed, and you were just wasting your time. So it was like every time you said you were an entrepreneur, like get your shit together and get to work, find a job. And when I get into venture, I started a co-working business and creating offline communities to spark innovation, entrepreneurial centers. That's how I started this career. And from there, I jumped into venture. I started angel investing with the few savings that I had. And then I started through that impact that we created and helping more than 80 companies start their businesses through our entrepreneurial clubs and co-working centers. I got accepted to the Carbon Fellows program in Silicon Valley. And before that, I was a bit curious about venture capital, but it wasn't that of a trend as well, or a buzzword in Mexico. It was still private equity. There were very few VC funds investing in maybe on the Series C rounds because there was no seed funds. They were not wanting to get into that kind of risk. There was no culture whatsoever as angel investors, and even worse, there was not very understanding, a big understanding around technology-based businesses. So back in 2014, I had the opportunity to be part of a new venture capital experience that it was called by Tim Draper in Draper University and Hero City, and his whole fund ecosystem that he has built. Being considered one of the top VC of a modern era in the US. So I went for a 1 week exposure to venture capital with Tim and his GPs of his different funds and portfolio companies, and get to know celebrities such as Elon Musk and many others from his portfolio companies throughout the program, and learn from the best and learn from experience and not from the theory. Was a huge impact in my life, and that's also what confirmed that instead of finding a job, I should create jobs. So I started on that mission of job creation, innovation, and creating abundance in the region. So that's how I got into venture, and then I started trying to nudge people, and that's how the first fund. The first vehicle that I can say that I would not consider such a big fund, but it's much more of an SPV that I started with my own contacts on my iPhone. It was, I don't want to do a road show. In fact, I don't know how to do a professional road show at that point in time. So I said I don't want to hassle on it. So I started calling people from my phone that I knew that had around 25K in their savings or more, and that they didn't have to ask permission even to their recent wives or their parents about using that money. So I talked to them, and I talked I did a small roadshow of two months. So in less than 2 months, I managed to gather up around $1 million in assets under management from 40 people, 25K checks, to start leveraging and continue to capitalize on the network that I have been building throughout the co-working and entrepreneurial centers, and started building portfolios. And I've been successful. I mean, already on the second fund, we're looking to raise fund 3 at the end of this year. We have more than around 51 portfolio companies. We have a good performance, I think a top percentile performance compared to other funds in the region, and compared to some funds in the US. I mean, I think we were on the right track with potential unicorn companies on the portfolio, with some of them, and some of them that we haven't detected yet. And on the side, I created Arkangeles.com as this investment platform to really expand even more the impact that we can create by bringing more people to invest in this amazing company solving real problems of society, creating abundance in Latin America.
You mentioned, so you had 51 portfolio companies right now, with some potential unicorns in there. How do you go about sourcing these companies? Do you have an investment strategy that you use, or a thesis that you kind of run off of in order to source and invest in these startups?
Yes. I mean, in a way, we're industry agnostic. I've been reaching out, and through the co-working and entrepreneurial centers, I had the opportunity to connect with different accelerators within the region and international. So I also had access to become that first boots on the ground help approach to many startups expanding to Mexico. So I started to expand that kind of network that gave me access to top deal flow. And now there's a lot of in-house or inbound pipeline that comes through the referrals of our own portfolio and the broad network that I have built in the past almost 9 years of my dedication to the entrepreneurial and investment ecosystem in LATAM. But the strategy, if Fund One started as much more of proving myself, of building a good portfolio and having as top deal flow, we have evolved in Fund Two to be only exclusively investing in Latin American companies. Because in Fund One, we did have some investments abroad in US-based companies. But then I proved to my LPs that there was no difference in talent and opportunity, that in fact there was a bigger opportunity to keep the money local and enrich and create wealth locally and build the ecosystem locally, rather than export capital into other ecosystems where the wealth creation would be kept there, not here, and create abundance locally. So that was part of the strategy that we changed. Then we're focusing in companies that are looking to really serve tech neglected cities. And what I say about tech neglected cities is most of Latin America has centralized governments and centralized operations as a society, where most of things happening 1 to 2 to 3 cities around each country. If you go to Mexico, it's Mexico, Guadalajara, and Monterrey. If you go to Colombia, it's Bogotá, Medellín, and Cali. If you go to Brazil, it's Sao Paulo, Rio, and if you go to Argentina, it's basically Buenos Aires and maybe Cordoba. If you go to Chile, Santiago. If you go to Peru, it's Lima. So basically, it's central, but there's many, but their whole 80% of that of each country's population don't live in those main cities. And when I say the majority of the population not living in those cities, it's also the majority of population that have access to internet and have access to a smartphone and own a smartphone. So basically, they're underserved population in all the industries that you can say: fintech, health tech, edtech, e-commerce, anything, logistics, last mile delivery, everything. And most of the startups want to start in bigger businesses because in a way there's a paradox. They think that they can go faster and penetrate and have a market share, bigger market share. But in fact, the customer acquisition cost is much, much higher because you have much more competition. And as an example, when all this mobility platforms coming into Mexico City, they started a war. I mean, in less than 2 years, there was Uber, Didi, and many other, Cabify, and many other players in Mexico City. In fact, Mexico City is, I think, one of the top 2 or top 3 cities around the world for Uber. So Didi came here, and he didn't get that market share as he expected, even if they had millions deployed locally. So I think that a better strategy for Didi would have been to try to pave the road in those technical cities with people wanting to commute from point A, to be transported from point A to point B through technology, because they have the same problems as a main city. They need transportation. There's a lack of transportation. There's an obsolete taxi or cab system there. So, for example, one of our first investments in Fund 2 was in a regional company within Mexico that started up in the smallest city in the country that has the lower population. It has, I don't know how many inhabitants, less than 1 million inhabitants. And he started with ride-hailing platform. And people were saying, like, dude, you're not gonna make it. And whenever he came to for example, mass challenge to accelerate himself in Mexico City, I remember on the demo day, I remember many angel investors and some funds saying, "You're crazy, man. This is not gonna happen." And whenever his pitch was, "I want to be the Uber of Mexico," everybody said to him, "Uber is already Mexico. So I heard that, and with my experience with my father, his strategy of building one of the biggest hospitality chains in LATAM was decentralizing from the main cities. He said, "I'm going to create a critical mass around cities that people or the big businessmen and business owners and hospitality chain owners are based in Mexico City, looking to show off themselves and having their flagships in these top cities." So people say, "Oh, these guys are abundant. These guys are great business owners or great leaders." My father started in cities and created a huge network of hotels around the country without being seen as competitors, and they always saw him as an underdog. And whenever he came to the city and say, "Hey guys, now I'm back. I want to be in your circles. Now I've grown from 0 to 110 hotels in less than 5 years. And you stayed with only 20 hotels, 30 hotels in main destinations." That's how he won the market. And he's replicating this in Colombia and replicating this in Chile, where he has hotels. So seeing that approach adapted to investing in this kind of technologies, when I saw this guy called Pronto with the ride-hailing company, I said to Mike, "Dude, if you want my check, please don't start in Mexico City as you're planning to. Just because you think that this is the big city, and just because you think that you need the branding or the perceptual value of your company down here, with the first checks that you're going to receive, you're not going to be competing. You cannot compete with the market dollars of Uber and Didi at the same time, finding each other for the whole city.
Right.
You will not be relevant."
So it's an interesting strategy to work from the outside in, right? Where you basically have the opportunity to validate your product, validate your customer feedback, all on a shorter or at least a smaller expense budget, because like you mentioned, your customer acquisition costs are lower. So,
and in a shorter cycle, and creating more loyalty,
right,
and brand awareness, and word of mouth.
Right.
So this Pronto company, in less than a year and a half, he's already in 35 cities, with ARRs on the Series A threshold. And through the pandemic, he expanded its services to become a super app, and now is doing last mile delivery, restaurant, dark kitchens, and all of that sort of things with the same network of people. So he has created this moat outside of Mexico City that nobody has. So that's the kind of businesses that we'd like to invest in, people that are thinking the same way as we are thinking, of decentralizing the countries in LATAM and giving access to all those neglected citizens around the region that have the purchasing power, they have the need for this type of products and services, but they don't have the apps, they don't have the service. They can download the app, they will not get the service. So there's another company from Argentina called Aperto that is doing the same thing with local merchants, in giving them the digitalization and access to their customers through an app in order to sell. So it's micro commerce.
And yeah, so basically it's an entire customer base that's just waiting to be accessed. And you mentioned that the decentralization of Latin America through this process, and you also mentioned that in your first example how a taxi business has grown exponentially through COVID-19. How has COVID-19 affected your investing and your investing strategy for meeting founders? And has the decentralization of Latin America, has that been helpful in terms of your investments there? Or how would you think about that from a venture standpoint?
It has not affected profoundly. I mean, it's a small dent. I mean, you change a bit of your traditional habits, right? But we've been doing video conference investing since inception, because being a small fund, a small fund, you don't have the resources nor the time to be traveling around and meeting or flying over founders to meet you at your office to invest in them. So we're very scrappy on how we do things, and we want to really we deploy the most amount of capital into value into startups. So it as I said, what it has brought to ourselves is, well, in a way, in most of our companies, fortunately, most of our companies had a lot of runway when COVID-19 hit. So that wasn't much of a problem for us. But talking about video conferencing, or how they call it out there, the Zoom investing approach right now, the Zoom investment thesis, has opened up the market for many, for our portfolio to tap into more and more capital abroad that are looking into LATAM, that they were looking or looking to expand into LATAM, but their culture or their investment committees were not usually accustomed to Zoom investing. So they decided, well, it's not the time, or we need to look for a local partner that could be our eyes in the local market to show us deal flow and to validate it for us and the sort. I think that kind of paradigms or perspectives have changed a bit, and that will open much more the markets. We've seen this trend of more money deploying into the region, and this definitely will accelerate even more capital to be deployed into amazing startups and tapping on this opportunity of lower valuations with bigger markets than what they could have in the Midwest in the US, for example.
Right. Yeah. And you know, I've mentioned before, that's one of the reasons why I actually created this platform, is the fact that, you know, international capital is going to be necessary to help grow these emerging markets. And right now, given all the technological advances and the innovation happening there and the lower valuations, it's basically a prime time to be deploying capital in these regions. And you and I had talked in an earlier conversation about how international capital and investing in these founders, basically, to use your statement, like the PayPal mafia, it creates this new kind of generation of angel investors and starting accelerators and education programs for entrepreneurs, and how it's basically good for the ecosystem as a whole for outside capital to come in and basically help boost it.
Yeah, because the wealth creation stays here. So now we're seeing those mafias being created locally. I mean, not as strong as the PayPal or the Fairchild or the Facebook or the Twitter mafias, or other hundreds of companies that I can mention that created mafias in the US. But you always start from something. And 5 years ago, we didn't have these mega rounds, and 5 years ago, we didn't have unicorns. But that's part of the start, and it's something that we have been struggling around as venture capitalists or capital formation guys. When we go to the LPs and ask for money, is the first question they ask to you is, "And what is your exit strategy?" And I say, "Dude, don't ask me about my exit strategy. Just ask me about my entry strategy, because if there's no entry, there's no exit. And if we've never had exits here, you cannot qualify ourselves, or you cannot put a score on if you're going to invest or not, because there's an illiquid market and there's no results, there's no success in exits yet." I said, "Well, dude, because if we continue thinking as you think, and if you continue rejecting GPs and VCs or angel investors or startups wanting to create wealth through the entrepreneurial venture, and you say no because there's no exits, then this will never change. In order to have exits, we need to have entries." And that's how I've been convincing some of them that don't have that kind of changing and shifting mindsets with a lot of other people that are working alongside me as peers in the venture side, in the acceleration programs, even the founders, that they have to row against the current to convince capital to be deployed. So the more capital coming from the US, the faster these guys were going to get convinced, the faster they will see more exits, the faster they're seeing this value. And from the 5 years till now, having unicorns, mega rounds, companies valued above $500 million, even decacorns we already have in the region. We have unicorns in Mexico. We have unicorns in Argentina, Uruguay. So that trend, it's a snowball effect that it's unstoppable. And that unstoppable inertia will bring more local capital to compete with internationals that now are using Zoom investing, or they're getting accustomed to the local culture, to the local ways of doing business locally. And that will create even more wealth, and creating more wealth will create more mafias on this kind of startups, such as the Rappis, the corner shops, the Walas, the Nubanks. People getting trained locally with a completely different mindset of what we were accustomed or used to be trained by local educators, governments, and business owners to work. We'd never had this conviction of creating jobs. We're more of a population and society of looking for a job after graduation or after something, always looking for a better job instead of looking to create a better jobs to create a better world. And this is shifting, and this is massive for us. And more money coming from the US or abroad will definitely accelerate the pace of local capital deployment. More angel investors being created, more VC funds being formed, more capital, more startups, more innovation, more abundance, more wealth, and then the cycle just keeps on going.
Yeah, it's a snowball effect. And these trends are currently happening, and obviously things are getting better and better. More entrepreneurs are coming out of Mexico, more capital is coming into Mexico. But are there currently any roadblocks to becoming an entrepreneur or starting a business, or even to venture funding currently in Mexico that need to be addressed?
Well, there's always ways of improving, right? It's a continuous, continuous progress and improving. We had before some government grants that now they were shut down when our new president came into the job. But that helped create and spark the first VC funds, the first modern VCs in Mexico, the first modern acceleration programs. Now, we have international brands. Even YC, 30% of their acceptance rate comes from LATAM at this point in time. 500 startups, it's strong in Mexico City for the region. Mass Challenge is strong in Mexico City for the region. Seed Stars from Europe is strong in Mexico City for the region. And now regional, there's other rising acceleration programs creating good impact, such as Parallel 18 in Puerto Rico with US government grants, but for the LATAM region. You have Rockstart in Colombia creating great batches of Colombian entrepreneurs based in Bogota. You have the NXTP Labs that has been for the past 5 to 8 years and has shifted into different kind of models, but they have created huge impact in impulsing and sparking this first wave of entrepreneurship in the region. So there's still a lot of brand. I think there's a lot of capital formation needed, and it's part of what I'm trying to build, emulating what has happened and the results and the impact that the AngelList, the Republics, the CrowdStreets, the Fundrise, talking real estate, talking startup and online capital formation, thanks to the Jobs Act and crowdfunding regulation, helping underrepresented companies raise funds. So Latin America has a huge gap in capital formation. And there's a lot of fintechs solving that through digital platforms and digital apps for consumer lending, peer-to-peer lending, corporate lending, small and business lending. and us on the investment side.
Yeah. Obviously, Arkangeles is playing a big part in that. So if you look kind of, say, 5 years down the line, where do you see Arkangeles heading, and what's your vision for the platform?
Well, our vision in a way is, yes, having deployed, having more than maybe 300 and 400 companies under the portfolio in startups, just talking startups, expanded into other asset classes, because in a way, our main client is democratizing the access to private equities and private capital for for almost 90% of the population that still invest in banks, that still invest in investment trusts offered by the banks, that they don't. In Latin America, we have high inflation rates, and most of those vehicles just get flat with inflation, or it may be 100 basis points above it. But when you take the interest, the taxation on interest rate, I mean on the capital gains, then you're basically losing purchasing power, and that's increasing even further the wealth gap that many people talk about, and it's not that yes, the rich get richer because they have more money to have access to better investment opportunities to create more money. So when the crowdfunding, when you see it as access and democratization of that, in a way, it's also giving you the opportunity with the new regulated markets on crowdfunding that also is taking place in Mexico and other 5 countries in the region, that gives you foot to a bigger how can I explain? I'm pronouncing it.
Financial.
Sorry, no, financialization of things.
Yeah. So
everything is getting financed.
Right.
Now you can and it's not in Mexico. It's still not here, but I see it in other trends in other parts of the world. But now you can finance anything that you can imagine through crowdfunding in a regulated market, because you do the KYC, you do all the anti-money laundering processes that the local governments and regulation entities are looking forward just to protect that front. But on the other side, if you go into capital and escrows, you can put a racing horse on an escrow and sell 30% of the future gainings of it, because you're a passionate, but you're a passionate, racehorse aficionado, but you don't have the means to own a horse. But you can own a small piece of it and earn profits from the Kentucky Derby, and not having to gamble your money on the Kentucky Derby. You're investing on the horse, and you have ownership on the horse, and that can be expanded into collectibles, old cars, and collectionable cars that appreciate 10% to 12% on a yearly basis. You can invest in art. You can invest in companies. You can invest in real estate. So how I see myself in the next 5 years is trying to offer the best alternative asset platform that you can have access to diversify portfolios within different risk thresholds, focused on startups, real estate, and other alternatives.
It's funny how you mentioned how everything has just become an asset that you can buy equity in. Yes, just yesterday, actually, I spoke to a founder based out of Mexico, and he works with ISAs, income share agreements for students.
Yeah.
And in a way, that's almost treating a human as an asset, right? That you can have equity in and place an investment in a person. So, yeah, it seems like everything's becoming investable. And, it's great to hear Arkangeles, diversifying beyond just startups, but increasing access to different financial tools for everybody.
Alongside education. And for me, financial education is part of the fintech scene. We need to educate people, create financial conscience, give them back control of their money, give them the platform and the means and the portals for them to invest their money as they wish. not as the bank wishes them to do, and not as the bank or financial advisors to sell you on products just because you don't have any other thing to sell, and convince your clients there is the best approach, that is the best value for your money, and that you're going to create huge tons of wealth when you retire.
Right.
That is totally untrue.
Right. You're empowering people to take control of their own finances and their own financial knowledge.
That's correct.
So as we get to the end of the show here, how can people get in touch with you if they're interested in learning more about Arkangeles or maybe potentially receiving investment from you?
Well, you can follow me on Twitter at LXVP. My email is luis@arkangeles.com. Arkangeles with a K, A-R-K, Angeles in Spanish.com. And basically, those are my main points of contact. You can follow us at Arkangeles.co on Twitter or Instagram. But basically, if you want to get in touch with me personally, I normally answer all my emails.
Great, and we'll put that contact information in the show notes. All right, everybody, be sure to check out Luis Arkangeles and more on the Ark Fund. And Luis, thank you so much again for coming on the show.
Seb, I appreciate your time, and hopefully this inspires more people to deploy capital and mobilize capital in LATAM and help us create progress and success in the region while you create exponential returns.
Thanks, Luis. All right, everyone. We'll see you next time.